Bank of Canada increased the overnight interest rate by 50 basis point. Why all of a sudden Bank of Canada is increasing their interest rate second time in a row? A lot of people are asking about inflation. We are at 31-year highest mark on inflation, but why all of a sudden? And if you have any type of variable mortgages, you are a homeowner, how it's going to impact and what will be your strategy in the future in this fluctuating high volatile markets. Hello everyone, my name is Mandeep Dhesi. In today's video, we are going to discuss all those questions. What happened in today's June 1st, 2022 meeting of Bank of Canada? They have increased the overnight interest rate by 50 basis point for a second consecutive time. You can see the overnight rate is at 1.5%, and any of you, if you have any type of mortgages or loans, student loan, which are variable, your prime lending rate will move from 3.2 to 3.7 with 50 basis point increase. Bank of Canada is targeting to have the inflation at a decent mark of 2%. And as of April, if you see that CPI index, which is the inflation calculator, it is at 6.8%. So there is a huge gap what Bank of Canada is anticipating and where we are right now. And the only tool, as we discussed in our previous videos also of inflation, they have to increase the interest rate. So less people are spending in the market. The housing market is moderating from exceptionally high levels that we saw in February month. But on the other side, they still see the consumer spending is still robust because it's summertime, people want to move out, they're spending more, which is still pushing the inflation at higher levels. But what is the reason for this inflation? Nobody was discussing this in the month of February. All of a sudden, everybody is focused towards that. As we can see that inflation globally and in Canada continues to rise. The reason for all this increase of 6.8% in month of April was because as per the Bank of Canada's forecast, even it's going to go higher if they are not regulating those monetary policies. The number one reason is Ukraine-Russia war, which is pushing the prices up for the food and commodities. Another reason which is that there is China's COVID-related lockdown. So there are news coming up that COVID is coming back in China, so which is impacting the demand and supply thing. The whole chain was disrupted because we know as per during the COVID times that still the things are not aligned as per the expectations. So there is a gap between demand and supply. As you know, even as of today, we went to Home Depot, the insulation bag, we can see there's a 50 to 80% increase in the prices, which is killing the construction cost for the homes. And it is everywhere. The dollar, even you see the buying power of dollar decreasing, the gas prices are at $2 per liter in Canada itself. If you go back into the history, we can see that it's going up every month. That is the key concern for the Bank of Canada, because with 70% of categories in the consumer price index, the main components, the commodities impacting the inflation are at still sitting above 3%, which is forcing the overall inflation index to go above 6.8%. It's a key challenge for the homeowners. Why? Because we saw the low interest rates around 1%, 1% plus minus, but now we can see the growth is it's already crossing more than 3%. It's a panic situation. Somebody who bought 1 year back, their mortgage payments are going to go up. What should be your key strategy in this volatile market? Either you want to go for fix or you want to continue with the variable. Let's discuss that very important question. So for example, what you can do, we can take an example. If you are in a 5-year variable mortgage with the interest rate of 2.6%, 0.5% increase for a 600,000 mortgage, this means your monthly interest rate will go up by $170. If you multiply by 12 months, it's going to heavily impact your cash flow and your financial situation. So that's a key concern to look into. In the COVID times, there was a huge gap between the variable and the fixed mortgage. Most of the people were excited about the variable mortgage. But as the interest rates is going up, we can see the both of those things, the gap is reducing between the fixed and the variable mortgages. To answer the question whether you should go for with the fixed and variable mortgage, our 2 cents is, if you want to gamble and speculate, then go with the variable mortgage, because in the overall picture in the long term you are paying less penalty if you move from one home to another, and the variable rates are always less than the fixed. But if you are on the other side, which are more of a conservative mindset, you want a peace of mind, it's okay, it goes up or down, I don't care, I'm going to stay in this home for next 5 years at least, then the fixed is the strategy for you. Because the future prediction is, with all those inflation standing at around 7%, to fill that gap, obviously the Bank of Canada have to push the interest rates more higher. So you need to be very clear what strategy you should go with based on your financial decisions, because with every hike it's going to impact your family's cash flow. At the end, the most important question, how it's going to impact our housing market in Canada. Obviously, when the interest rates goes up, people affordability decreases and the prices of the homes also decrease. So right now we are in a situation where we are out of that hot market of starting of 2022. The prices have already cooled off. As of April, we can see the average price is around 750 across all the property types in Canada, which was around 800,000. As a buyer, you have a better choice of the properties available, but be mindful, in the future it might happen that interest rates goes up. So make your decision based on how much you can afford, what type of mortgage you can qualify for, because it's important to figure out that whenever you go for the qualification, there are two important factors. The first is either it's a higher of 5.25% or your current contract rate plus 2% on the add-on which banks take it. For example, you're taking a mortgage of 3.5% right now, which is you're getting qualified, then the bank will qualify with 2% extra on that, so you're getting qualified by 5.5%. it is called a stress test. So banks are taking their caution, but you as a buyer or as an investor, you need to do your due diligence and see your cash flow. Thanks again. Thanks for watching our another wonderful video on the inflation and on the 50 basis point. As you know, in the future we have a meeting which is happening on 30th of July where Bank of Canada is going to do the interest rate monitoring again and coming with a monetary policy. Let's wait till then what they come up with. Thank you again.